Good morning and welcome to this Money Control live stream. You're watching Opening Bell with me, Nandita Khemka. It's a Wednesday morning and the cues are fairly mixed. The GIFT Nifty is hinting at a strong start. Yesterday, we clocked in a second straight day of weakness. In fact, we took out that 25,150 mark, just ending a shade below that level. But yes, it was the second straight day of weakness. Of course, it was the weekly FNO expiry as well. So there was a fair bit of volatility as well. We saw some swings. We slipped below that 25,100 mark as well at one point in time, but did well to recover from the day's low and end around that 25,150 mark. In terms of the global cues, there is lots to digest given the fact that there are some renewed tensions between China and US, where President Trump has threatened to impose some kind of embargo on China with respect to cooking oil. Now, the issue is the fact that China is not buying US soybean, and that, according to Trump, is a hostile act, so to say. That's something that had kept Wall Street on edge. We saw wild swings on Wall Street overnight, which, by the way, ended off the day's low with the Dow, in fact, ending in the green. But S&P 500, of course, saw wild swings and ended the day in the red. In terms of earnings, lots to watch out for. You have Tech Mahindra that reported numbers. You have Persistent as well, reported good numbers, but of course brokerages continue to flag valuation concerns there. But Tech Mahindra and Persistent will be in focus, and of course the big bank earnings kick starts today as well. We have Axis Bank reporting numbers post market hours. So yes, that's another stock that will be in focus. Lots to watch out for over the next 1 hour. And, we'll of course be getting you Diwali picks as well. 3 top picks from a new expert then later on in the show. So don't miss that. And of course, all your stock related queries will also be taken up during the course of the show. So keep them coming in. We will try and get them addressed by our experts as well. But before we bring on board our experts for the day, let's take a look at the top stories at this hour. Stocks on Wall Street ended on a mixed note. The S&P 500 staged a comeback but pared gains as US President Donald Trump criticizes China for not buying US soybean. Now, Dow Jones saw a 1,000-point swing aided by the banking stocks. In fact, also some comments from Fed chairperson coming in, where he said that economy may be on firmer footing, but the job market remains weak, and he has, of course, hinted at more rate cuts going forward as well. And Asian markets trade higher as investors track economic data from China. Also, I think they're taking stock of the commentary with regards to the US economy and the jobs market, which indicated at more rate cuts. That's also something that Asian markets are taking stock of because they are trading in the positive zone, and the GIFT Nifty, of course, is hinting at a positive open for our markets as well. Crude oil prices settle lower amid renewed trade tensions between the US and China. Gold, on the other hand, continues to notch fresh record highs. The spot gold was above that $4,100 an ounce mark, but in the futures market, gold did top that 4,200 mark as well on expectations of a Fed rate cut this month. US President Donald Trump says his administration is considering terminating business with China with respect to cooking oil. This in retaliation for Beijing refusing to buy US soybeans. He also adds that China is committing an economically hostile act by not doing so. IT major Tech Mahindra's September quarter profit falls slightly short of estimates while revenue grows sequentially, led by banking and manufacturing verticals. Also, watch out for Axis Bank that will report its second quarter numbers today. Money Control poll suggests profit may fall 14% on a year-on-year basis. All right, quickly recapping yesterday's market action then, we failed to hold on to opening gains. In fact, there were wild swings in our market as well yesterday, it being a weekly expiry day. The Nifty crossed that 25,300 mark on the upside, but it also crossed that 25,100 mark on the downside on an intraday basis. The mid-cap index outperformed. Market breadth, although, favoured declines. Mid-cap index was down 1% versus a fall of almost 0.5% on both the Nifty and Sensex. All the sectors ended in the red, by the way, led by PSU banks. Of course, Tata Motors was one stock that was in focus because the demerger scheme has taken effect. The passenger vehicle business listed at 400 rupees per share. Of course, the CV business will list at a later date. Quite a few, movers and shakers. You had GAIL that was, reacting to some negative news flow. Dixon Tech, of course, fell more than 3% as brokerages indicated that there could be a guidance miss, but there were some outliers as well, the likes of MCX. That stock was up and about. In fact, for a second straight day, I think 5% up on a MCX. But the LG Electronics, of course, that was hands down the stock of the day. A very, very strong debut, dhamaka debut ahead of Diwali, so to say. 50% premium, that's how it listed. Of course, there are some initiation calls from brokerages as the stock has made its debut. We'll take stock of that as well in the course of the show. The put call ratio dropped to 0.9 vis-a-vis 1.05 in the previous session. Stocks that will remain in F&O ban are the likes of RBL Bank and Saman Capital. And in terms of fund flows, foreign investor selling has abated. But once again, we saw a figure of 1,500 crore rupees in terms of the FI net sell figure, while DII buying support continues at 3,661 crore rupees in equities in the cash market. On that note, bring on board Nilesh Jain of Centrum Broking to understand the setup for today and of course to take stock of all the stocks that will be in focus today. Nilesh, lovely chatting with you. Festivities have begun, but some bit of a snag when it comes to the up move that we had seen recently on the Lal Street. We clocked at 25,300 mark on the upside, 25,330, that's the swing high, but we also violated the 25,100 on the downside. Yesterday there was a fair bit of volatility. What is it? What is the setup looking like for today? And would you expect the momentum to resume after a 2-day gap?
Good morning, Nandita. Good morning, everyone. So first of all, if you see the markets, we have been witnessing a good momentum in last few trading session, all the way from 24,600. The Nifty reached the levels of 25,300. So close to 700 point rally we have seen. And in last three session, what we are witnessing is merely a consolidation. So that's kind of a healthy sign. Another positive development, I would say, in spite of a weakness that we saw yesterday, the Nifty managed to recoup its losses after taking support at its 21-day moving average that is placed at 25,060 odd levels. And that is acting as immediate support. So in fact, there are multiple supports in place, starting with 2550, followed by 25,000. There's a psychological support, as well as followed by 25,960. That's the 100-day moving average. So overall, we are not expecting any major crack from here. In fact, there could be possibility of a gap up or a positive start for the day. On the upside, I would rather wait for a breakout over 25,300 that will provide more confidence, because that's the strike where we have seen huge amount of call writing yesterday as well. So in the coming, if you look at the data of the coming weekly expiry, 25,300, 25,200, these were the strike yesterday where we have seen huge amount of call writing. So there could be possibility of a short covering rally, which will take Nifty towards 25,400 to 25,500 in the October series. So we continue to remain bullish on the market. Buy and decline should be the strategy. In fact, yesterday's dip was a very good opportunity in terms of making a fresh longs in the Nifty index. Coming to Bank Nifty, we have seen a bit of relative outperformance compared to the Nifty index. In fact, that has been a trend in last few trading sessions now. Overall, earlier it gave a good breakout from an inverse HNS pattern that was seen at 55,500. That was the neckline resistance, which will now act as a strong support zone for the Bank Nifty. So overall, we are expecting Bank Nifty to outperform the Nifty index in the October series. And from here, the immediate target that we are eyeing for is 57,000, followed by 57,600. Quite possible that we may see a new record high coming in the Bank Nifty in the October series. So overall, the structure for both Nifty and Bank Nifty continues to remain bullish. But if you see volatility index India weeks, which surged 10.5% this week in last two consecutive session, in fact. So that is something that one needs to watch out for. It needs to cool off below 11, then probably we can get more comfort in the market. But as of now, since it is at elevated levels, so caution is advised. But yes, buy and decline should be the strategy.
Okay, buy and decline should be the strategy, but you did say that in October series we could look at a fresh high when it comes to the Bank Nifty. which are the stocks that could drive the Nifty Bank Index to hit a record high. From the private banking sector, we have Axis Bank kicking off the earnings season for this sector. Just very briefly taking you through the expectations, numbers are likely to be under pressure. Higher credit costs are likely to squeeze margins. Analysts are expecting slower loan growth as well, and there could be a mild uptick in the bad loans as well for the company. Both NII and profit are likely to see a decline, with NII dropping somewhere around 0.7%. That's what the money control poll is throwing up, and profit is likely to see a sharp decline of 14%. On a year-on-year basis as well. Stock performance in the last 1 month, it has done fairly okay, almost 7% up, in tandem with how the Nifty Bank has managed to take the lead in comparison to the Nifty index. But, what are your thoughts ahead of earnings, how you positioned in Axis, and which of the private sector names could lead the Nifty Bank index to record highs in October series?
Right, Nandita. So first of all, starting with Axis Bank, which will be coming out with the numbers. So ahead of that, it is facing a resistance at 1220. So 1220 is a very strong resistance for this particular counter. At the same time, 1120 is a very strong support. That's the 100-point tight range for the Axis Bank. And for those who are already holding the long position, can continue to stay put in this particular counter, keeping a stop loss below 1125. Overall, we are expecting a gradual upmove to continue in this particular counter. We also remain bullish on Axis Bank as well, but it is better to watch out for the numbers. If in case, if you see levels of 1150 or 1120 due to the market volatility, that can be a good entry point in terms of making a fresh entry. And as far as on the upside targets are concerned, 1250 to 1280 is something that we can expect going forward. Now, coming to which banks are looking positive as of now from the private sector bank. Kotak Mahindra Bank is something that is looking very strong on the chart, and we are expecting this particular counter to do well from here. 2200 to 2250. These are the target on the upside. 2100 is a very strong support. That should be the stop loss. Apart from that, index heavyweight counter HDFC Bank. That is also showing some bit of resilience, and we have seen a good bottoming out process in this particular counter at 940. 940 is a very strong support. That should be the stop loss. 1000 to 1020 or a fresh record high in HDFC Bank can be seen going forward. So again, a band decline should be the study in this particular counter as well. Now coming to PSU banks, you have already seen a very strong momentum in the counters like SBI, Can Bank, BOB. In fact, SBI has once again reached to its all-time high levels. It is trading near about those levels. So we are bullish on SBI as well for upside target of 900 to 920. And apart from that, Can Bank BOB continues to remain a preferred bet within PSU Bank. So overall, we believe that financial space is something that one should watch out for as far as October series is concerned.
All right, that's the view on the Nifty Bank Index and the Nifty PSU Bank Index, and of course how some of these stocks are likely to pan out. But let's take stock of the first ticks that are coming in. A positive one, we had reclaimed the 25,200 mark. We were bracing for a positive start, as was being indicated by the GIFT Nifty. All the global cues are mixed, but of course the commentary from the Fed chairperson in terms of rate cuts, that's something that could have spread some kind of cheer on Wall Street despite the ongoing trade tensions between US and China. But yes, a good start. Sensex up almost 200 points. The mid-cap index outperforming at the current juncture, slightly so, but nevertheless, almost 0.4% kind of gain on the Nifty mid-cap index. Breadth skewed in favor of gainers at the juncture. 2:1, that's the advanced decline ratio, but of course early days to call it a trend really. Yesterday as well, we started off on a good note when it comes to the breadth, but then it kind of reversed as we progress through the day. So we'll have to see how things really pan out and whether or not these trends will sustain or not. In terms of the sectoral movers, the Nifty Bank Index is up today. It's up 0.3%. 56,678 is where it's at. Heading towards 56,700. In terms of the other sectors, let's see which other sectors are taking the lead. You have the PSU Bank Index that was the top laggard yesterday, has managed to take the lead today, up 0.5%. You have the Nifty Bank Index, as I mentioned, up almost 0.5%. FMCG, autos, realty, all of them are clocking in gains of 0.3% or thereabouts. Even metals and IT are participating. As of now, all the sectors are trading in the green. Slim gains, no big fireworks, so to say, in terms of sectoral movers, but nevertheless, the texture looks firmly in the green at the current juncture. Just want to see what a Persistent is doing. Reported good set of numbers, but there are concerns about valuation. The stock has rallied quite a bit. Uh, so that's why I think brokerages are still a little cautious. But the stock is up 3% as we speak. And in terms of the index movers, then let's take a look at which are the stocks that are making some waves in trade. That's Geo Financial. That's the top Nifty gainer. Just about 1.5% gain on that counter. Bajaj Twins are doing well. In fact, Bajaj Finance is up 1%. You have Bajaj Finserv as well. That's doing well. Indigo, that stock is up 1%. L&T, Adani Twins, Shriram Finance, Bharat Electronics, Bharti Airtel, Trent, Bajaj Auto. These are some of the top movers. The list of losers is pretty slim this morning, which is a good thing. And that's being dominated by Titan. That stock is down 0.7%. Mind you, gold is continuing to hit record highs on a daily basis. In the futures market, gold in fact crossed that $4,200 per ounce mark as well. Tech Mahindra under some bit of a selling pressure. Numbers are fairly mixed. We'll discuss that in just a few minutes, but that's down 0.5%. And so is Axis Bank ahead of numbers. That's down somewhere around 0.3%. But in terms of the technology names, I want to get in your thoughts on a Tech Mahindra. Profits were marginally below expectations. They were up almost 5%. Revenues also rose somewhere around 5% or so on a quarter-to-quarter basis. Margins were higher at 12.1% vis-a-vis 11.1% in the previous quarter. Just going through some of the notes. I think Nomura has a buy call. The target price 1670. They say that Tech Mahindra Q2 performance was a good show on most parameters, and they are pretty impressed by the deal wins and the deal pipeline as well. And of course, the company is aiming for better growth going forward in FY26 and FY27. What did you do with tech names last week when the technology pack was buoyant? So far this week, we've seen a cool off. But last week tech shares did fairly well. Mid cap names like Persistent after numbers, would that look more appealing at the current juncture on charts, or would you look at some of these large cap names given the fact that they have already seen quite a bit of a correction?
Well, absolutely, Nandita. You have rightly pointed out. Last week we saw a good momentum, a spurt of over 2% in the Nifty IT index. So within that space, we continue to remain bullish on mid cap and small cap IT names. We have already seen a good set of numbers from the Persistent system. TCL also came out with the numbers. Overall, if you see Nifty IT index as of now, after a sharp pullback from all the way from the levels of 33,500, it jumped to 35,500 levels. So almost 2000 point rally we have seen in the Nifty IT index. So there could be possibility of some bit of consolidation. But yes, at present level as well, I believe that there is a lot of potential in the Nifty IT space on the upside. So from a risk and reward perspective as well, these are the good levels to accumulate IT stocks. A couple of names just want to highlight. Coforge is something that is looking positive to me for the upside target of 1850. That's kind of positional target one can expect. And 1690 is a support for this particular stock. Coming to Persistent system, although we have seen a good move today, in fact, after numbers, so there can be seen a gap up opening, but overall the structure still looks strong for 5,800 to 6,000 levels on the upside. So buy and decline should be the strategy, since already we have seen a spurt of over 5%. The risk and reward is not looking attractive at present level, but yes, if at all you see any dip below 5,600, that can be used as a buying opportunity, keeping a stop loss below 5,400. Target, as mentioned, 5,800 and 6,000 on from a short-term perspective. Apart from that, another stock that's SCL Tech that is looking good to accumulate. But these are the stock ideas that one should accumulate for little positional perspective. One can expect, in the medium term, the kind of return that we are expecting is in the range of 5 to 10%.
Okay, that's the view. Those are the kind of returns to expect, but some of the mid-cap IT names, the risk reward may not be looking that attractive, but of course you can look at buying on dips. That's the call. But another one that's been buzzing on the back of numbers is ICICI Lombard. The stock has shot up, above rallying 5% or so. Numbers came out and they look pretty strong. Combined ratio came in at 105.1% vis-a-vis 104.5%. Total income was also up in double digits. You have net profit almost up 20%, gross premium gaining 1.5%. The stock has been doing fairly okay. It has been in an uptrend, a steady uptrend, no big moves as such, but the uptrend is intact. So, what is the kind of level you will be watching out for on an immediate basis? And is 2000 on the charts on cards anytime soon?
So Nandita, first of all, if you can pull up last 6 months chart, you can clearly see the stock was in a formation of a lower top and low bottom. Now today's move has negated that bearish setup and looks like we may see a follow-up on the upside. Immediate level on the upside could be 2000. But we are expecting a move towards 2050 as well as a positional target. So at present level, again, after a 5% spurt, not advisable to chase. But yes, if somebody is already holding the long position, should ride this momentum up to 2000 on a very immediate basis. Quite possible that we may see in a day or two. But look for 2050 kind of target. Keep a trailing stop loss at 1900. That's the today's low, somewhere around that level. One can keep a stop loss. Structure looks positive.
Okay, that's about ICICI Lombard. But let's shift focus to our viewer queries then. On that note, now there are a couple of queries on the recent listings, which I'm sure Nilesh, won't be the right person to answer given the fact that there is very limited data for him to do so. But in any case, LG, after the blockbuster Dhamaka debut ahead of Diwali, any thoughts there? I know you don't have much data to go by, but what does it look like?
So Naita, first of all, as you mentioned, we don't have data on technical front, but yes, on fundamental side, we came out with a note for upside target of 1800. That's our target on fundamental side for this particular counter. Overall, looks good. We have seen a bumper listing, but the good part is that after that bumper listing, the stock did not give away the gains. It is still sustaining well above its 1700 mark. So a follow-up move from a short-term trading perspective, if somebody is eyeing to keep this stock if got it in the IPO, then keep a trailing stop loss at 1670, and on the upside the momentum can be seen towards 1750 to 1800. So 1800 is our institutional target for this particular counter.
Okay, 1800 on the upside, that's the target. That was a query from Naveen. You've already made 46% profit, so congratulations on that. But keep 1800 rupees as a target on the upside. But let's focus in on the next query then. This one's coming in from Amit Kumar Srivastav, wants to know your thoughts on Oswal pumps. I was just going through the charts of an Oswal pump. It saw good gains in the last 6 months, but it has a reversed course, and last 2.5 odd months, it has come off 15%. And last month as well, it has lost 10%. But in the last 5 sessions, it was trying to make some kind of feeble recovery. At 738, would you advise looking at a Motilal, I beg your pardon, Oswal pumps, or would you say it's an avoid?
See, if somebody is looking to make a fresh entry, then it's an avoid, because if you see the stock made a high in the month of August, somewhere around 880, 885, and soon after that, we are constantly witnessing a lower top and lower bottom formation. So there are no strong rebound yet. If somebody is already holding the long position, can keep a stop loss at 720. But for fresh entry, it's an avoid till time it doesn't take out 800 levels on the upside. We are not recommending buy in this particular counter. There may be possibility of some bit of consolidation to continue.
Expect more consolidation to continue. That's the view on an Oswal pumps. I hope that has answered your query. There's another query that I spotted on the feed that's coming on a GNA Axel. Don't really get the person's name here. The person is holding 100 shares of GNA Axle at 496 rupees. Wants to know whether it should be averaged at current levels or should they exit with a loss. The stock is at 305. The buy price is quite steep at 496. What would you advise?
See, Nanta, if possible, then I would request to pull up last 5 year chart of this particular counter. You can clearly see there was a double top pattern at 550. That was a strong resistance zone. And from those levels, we have seen a continuation of a correction. And still, there are no signs of any sort of bottoming out in this particular counter. So, structure is still looking weak. No point averaging out your existing long position because the short-term structure still looks weak till the time it doesn't take out 340 levels on the upside. So overall, the structure is indicating that whatever pullback, if you get towards 330, 340, that might get sold into. So exit on pullback should be the strategy. If bought it from a short to medium term perspective, if bought it from a longer term perspective, that's a different story. But yes, from a technical perspective, short term structure is looking weak. If it breaks below 290 level, then it's an kind of a structured breakdown. Then probably you can drag further towards 280 to 250 as well.
Okay, that's the view and that's the advice on GNA Axles. Hope that helped you. But let's take up a query on Akum drugs then. This one's coming in from Satvika Ranganathan. The Akum drugs, of course, has seen quite a bit of a shave off. The stock is in fact closer to its 52-week lows. But last 5 sessions, we did see some kind of attempt of a feeble comeback by the stock. How should one approach this one?
See again, it got listed in the year 2024, and if you see the data, I would request the PCR team to flash the chart of last 1.5 year. You can clearly see the stock has been in a declining trend, constantly sliding. Whatever pullback in between we got that got sold into. So structure is hinting that there could be possibility of another leg on the lower side, which may take this counter towards 450, 440 as well. So till the time it doesn't take out 500 level on the upside, there could be possibility of selling pressure at the high level. So not advisable to buy from a short-term perspective. From a positional perspective, somebody has already bought into this particular counter, then keep a stick stop loss at 437. And if you get any pullback towards 480 to 500, use that pullback to exit. So that's the view from a short-term perspective.
Okay, that's the view on Akum drugs on a short-term basis. But there is a query from Manish Kumar, Manish Verma, I beg your pardon, on Cera sanitary ware, and how is it looking like with a long-term perspective? Is it a buy? The stock is extremely flat. Last month as well hasn't really seen any kind of fireworks. Um, anything to do here in terms of taking action? Should it be a buy or is it an avoid?
See, it's an avoid because the stock is constantly facing resistance, and we have seen a lot of consolidation. If you see current market price, there's somewhere around 6,090. It's at the same price that was at in the year 2021. So in last 4 year, we haven't seen any return in this particular counter. So it's an avoid from a short to medium term perspective. But yes, for a longer term perspective, if you get any dip towards 5,500 or 5,000. That probably can be a good entry point, keeping a stop loss below 4,600. Then probably long-term play could be back into the action. But as of now, short to medium-term structure is hinting that there could be possibility of another leg on the lower side.
Okay, there could be a possibility of another leg on the lower side, which is why it's an avoid. Uh, Manish, hope that answers your query. But let's take up some other queries then. This one's coming in from the metal, on the metal space, Tata Steel in particular from Geetu Sandesh wants to know whether it's a good buy for the long term. Tata Steel, of course, we know that steel counters, metals have seen a good, run. Even at a time when the markets were witnessing a correction, metals were, perched on firm ground. Some of these steel names have already hit 52-week highs as well. At these levels, is Tata Steel looking like a buy?
Absolutely, Nandita, as you have rightly pointed out, we have seen a strong momentum across all metal counter, but at present level, there could be possibility of some bit of time-wise correction because price-wise action we have already seen a very good spurt in a very quick time. So I won't recommend or suggest to buy Tata Steel at current market price. But yes, it's a good stock to be into the portfolio for upside target of 200 plus from a positional perspective. But ideal entry point should be somewhere around 165 to 160. If at all you get those levels, that can be a good entry point. Or another approach could be to buy in a staggered manner. Positionally, next 1 year or 1.5 year kind of time frame, I won't be surprised if these stocks move beyond 200 and test 230, 250 levels on the upside. So we continue to remain bullish on metal space, and our preferred bets are JSPL, Hindalco, Nalco from aluminum space, and yes, Tata Steel as well, but not at current level on declines.
Okay, buy on declines, that's the call on a Tata Steel. Focus on the next query then. Coming in from Pooja Khanna on EPL, I think she holds at 225. What should be the exit price? Now, EPL is at 207.6 right now. So, she is making some bit of a loss here, and the stock has been stuck in a downtrend. Although last 6 months it did manage to stage some kind of recovery, but again it slipped into the red. If you look at the last couple of months, exit wise, should she wait more? Could she at least break even at any point in time?
See, first of all, if you see last 5, 6 years, the stock has stuck in a very tight range on the upside. 280 has acted as a very strong resistance. There's a kind of a double top, and at the same time, it has found a very strong support at 140 levels. Currently, exactly, it is trading in between that particular range. But immediate trend is indicating that there could be possibility of a further downtick in this particular counter towards 195 to 190 as well. So structure appears to be on a weaker side. Sell on rise should be the strategy. If you get any pullback towards 220, 225, use that pullback to exit from this particular counter because the short-term structure is looking weak. Just in case if it breaks above 225, then probably we can expect a pullback move to continue towards 240 to 250. But as of now, there are no signs of any reversal. It's an avoid taking any fresh entry if already holding and wants to continue to remain long, then keep a stick stop loss at 203.
Okay, 213, that should be a strict stop loss. Hope that answers your query. 2, 3 more queries then, since they are on the feed, I'm going to quickly get them addressed. There's a query from Pannu Anil on GRSE, and there is one from the shipyard space. Nana Prakasam wants to know your thoughts on Cochin Shipyard, whether it's the right time to enter. How are these shipyard stocks looking now?
See, short-term structure appears more sort of a sideways. We have seen a lot of consolidation. It looks like the consolidation is likely to continue. So 2400 is a very strong support for GRSC. From a trading perspective, there are no clear trend as of now. Looks sideways. 2800 is a resistance, so that's the zone as of now. We are not advising any sort of a fresh entry to be taken at this current market price. Coming to Cochin Shipyard, looks better placed than the GRSC, and a gradual up move is something that one can expect towards 2000 2100. But the view should be taken from a positional perspective, let's say 6 to 8 months kind of time frame. If somebody is having, then yes, this counter can be added in the portfolio, keeping a stop loss below 1600.
Okay, that's the view on some of these ship building names. Hope that answers your query. And now let's take up queries from our regular viewers as well. Let's not forget them. One query from Debu K on Pirimal Pharma wants to know the immediate support level. The stock has been in a downtrend. It's at 193 or so. But what should be the immediate stop loss here?
See, very immediate stop loss should be at 188. If it breaks below 188, then the next major support that will come somewhere around 182. So these are the two important support to watch out for. But the major structure is looking slightly on a weaker side from a short-term trading perspective. If you are looking to make a fresh entry, it's an avoid. If already holding, then keep a stop loss at 188.
Okay, 188, that's the stop loss to watch out for. Hope that answers your query, Debu K. Last query for the day coming in from Satya CK wants to know your thoughts on MGL, Mahanagar Gas. Is it worth it adding for long term? In fact, is it worth adding for the long term, or should he average at the current juncture? What would you advise?
See, it's a good stock, no doubt, from a positional perspective. Technically, if you see a short-term trend, then it looks more sort of a sideways. If you want to time this particular counter, then I would advise to better wait for a breakout above 1360. That will give you a confirmation of a short-term trend reversal. But as of now, looks more sort of a sideways. From a longer-term perspective, yes, these are the good levels to accumulate. But keeping in mind that there could be possibility of another leg on the lower side, which will take this counter towards the 1250, 1200 as well. So whatever dip you get can be used as a buying opportunity, but time horizon should be more than 1 year if you want to, stay put in this particular counter.
Okay, that's the view on Mahanagar Gas. With that, we've come to the end of the query segment. If you couldn't take up your query, don't get disheartened. Keep them coming in. We'll try and get them addressed the next day. But with that, Nilesh, would like to thank you. But before I let you go, first, your recommendations for the week and any Mahurat trading picks that you would like to share with our viewers.
Absolutely, Nandita. So first of all, from a trading perspective, as mentioned, mid cap and small cap ITs are looking positive. So Coforge is something that one can look for upside target of 1800 plus, keeping a stop loss below 1690. This particular counter can be bought. So Coforge is a buy. Apart from that, another stock that is looking positive is Granules. So both from a positional perspective as well as from a short-term trading perspective, Granules is something that is looking attractive at current level given the kind of a setup that you can see. A big rounding bottom is shaping up with this particular counter. So looks positive for 600, 610 from a short-term perspective. And from a positional perspective as well, this stock has a potential to test 680 to 700 levels on the upside. So 555 should be the stop loss. Now coming to a Diwali peak, see, we came out with a Diwali peak on Bajaj Auto, this particular stock, because if you see Nifty Auto Index has given a good momentum all the way from 24,000, 27,500 kind of levels we have seen in a very short term time frame. But this particular counter was been a laggard kind of structure we have seen. But now looks like the stock has bottomed out. It has reclaimed all long term and short term moving averages. Risk and reward is also looking attractive. We have seen a buy crossover in MACD and RSI as well. So watch out for Bajaj Auto. Positional target comes around 11,000. That's next 1 year target. And the short-term target could be somewhere around 9,600 to 10,000. Stop loss should be placed at 8,500. That should be the stop loss.
All right, Bajaj Auto Mahurat trading pick from Nilesh. With that, Nilesh, would like to thank you for taking out time and joining in this morning. Wishing you and the entire team at Centrum a very, very happy Diwali and a prosperous new year ahead. Wish you a very profitable Samvat 2082.
Thank you, Nandita. Wish you the same. Wish you all the viewers, entire team of Money Control a very happy Diwali and a happy New Year in advance.
Thank you so much. Well, with that, of course, we will shift focus to the market before we come to our special Diwali segment. That's Dhamakedar Diwali Stocks. We'll get your new expert with top 3 stocks for the new Samvat. But before that, take a look at the market. We have, picked up steam firmly above that 25,200 mark. The mid-cap index is also outperforming at the current juncture. That's up almost 0.7%. The breadth is firmly skewed in favor of gainers, but the Nifty Bank Index has given up some gains, pared its gains. Now just about 50 odd points up, 56,500. It's holding on to that level, but there is a fair bit of caution ahead of the Axis Bank numbers, and Axis Bank itself was trading in the red last time I checked. Yes, it's down almost 1% or so, aside of some other banking names like HDFC Bank and Kotak Mahindra Bank. Also some IT names not doing all that well, the likes of Tech Mahindra after numbers. Top Nifty loser, Infosys as well, out of favor at the current juncture. But then, on that note, as promised, time now for a special segment, Dhamakedar Diwali Stocks, where we bring you the hottest stock ideas for Samvat 2082 to add extra zing to your portfolio this festive season. Now, whether you're looking to light up your investments or add serious shine to your portfolio, we've got expert insights and top picks to help you invest smartly this Diwali. Now, last Samvat, the markets hardly saw any fireworks and underperformed emerging market peers. The question is, will the tide turn in the new Samvat? Now, experts believe earnings have bottomed out, and with recent reforms and RBI rate cuts, earnings are expected to pick up. Now, foreign investors who've been major sellers this year, the selling out there has kind of started to ease off a bit, raising hopes of a potential comeback. But will that happen? Well, to get a better sense of what Samvat 2082 could look like, and for some of the hottest stock recommendations this festive season, we now have with us Siddhartha Khemka, Head of Research, Wealth Management at Motilal Oswal Financial Services with us. Welcome to the show, Siddharth. Lovely chatting with you. Wishing you a very happy Diwali and all your team members and teammates at Motilal Oswal. A very happy Diwali as well. But looking at the year gone by, there has hardly been any fireworks. We've been extremely flat. We've underperformed. There have been fair bit of turbulence in terms of the global landscape. Trump tariffs, earnings of course have been muted. FIIs have been, net sellers, a big amount, being withdrawn from the Indian markets. But then towards the latter half, we did see some bit of normalcy kick in. Good news in terms of tax cuts, GST cuts, fiscal measures, RBI rate cuts. So there's a balance of bad news and good news. But in Samvat 2082, what are your expectations? Do you see some of the fireworks returning, given the fact that we've already underperformed so much vis-a-vis global peers? Is India a catch-up trade, and could we retest all-time highs in Samvat 2082?
Thank you so much, Nandita. Good morning, and wishing you entire team of Money Control a happy Diwali and a profitable Samvat ahead. All the viewers may have a great profitable year. So I think yes, last year we were thinking that the momentum in the market should continue. The lot of the domestic factors that continue to be in the positive, while you would see that there are several global headwinds which impacted or derailed the kind of growth that our economy was looking at. The first is obviously the US tariff, which kind of impacted not only the sentiment but also has the potential to slow the growth in exports going forward. So any resolution there would be a key catalyst going forward. Earnings after 3-4 years of strong double-digit earnings growth, corporate earnings showed some slowback and grew only about 5 to 6%. We expect after 3 or 4 quarters of slower growth, second half of FY26, earnings recovery to start picking up. There are several factors which should drive the corporate earnings. First of which is the interest rates. Cost of capital coming down drastically since the start of the year. RBI has cut the repo rate by 100 basis points. We are expecting another 50 basis points rate cut over the next few months. So December onwards, we expect RBI to resume its rate cut cycle again. CRR has been cut by 150 basis points. Enough liquidity injection has been done. After that, we had the government in the budget giving the tax benefit to income taxpayers. We had a good monsoon. Inflation has been low. Crude oil prices has relatively remained stable, leading to a stable inflationary environment. And to top it all, we had the GST 2.0 cut, which impacts the entire nation in that sense that while the income tax only touches about 3 to 4% of the public, the indirect tax is something that we all pay, and essential items, goods have been brought down. So I think that should lead to a big boost in the domestic consumption. So and we also have the festive season where we have seen the numbers for a lot of consumer companies reporting strong recovery in volume growth. So all in all, we expect second half to see a good recovery. FY27, which is bulk of your Samvat 82, should see the earnings growth going back to the double digit, about 14% growth. After this year, we are expecting about 7-8% of Nifty 50 earnings growth. So, and finally, the valuations. Nifty saw some correction in the initial part of last 1 year, then we saw recovery. So in this global environment, we saw resilience from the Indian markets. Yes, we underperformed globally, but do mark that previous 3 years we sharply outperformed. So I think there is some kind of resilience that Indian markets have shown. Valuations have come down on back of time correction, and we do expect about 15-20% returns in the next somewhat from here on.
All right, 15-20% double-digit returns from in the next summer. That's what you can expect. But let's break it down to individual stocks then, since the show is all about the top three investment ideas for the new Samvat. Take us through the very first one. Which one have you shortlisted?
So yes, so coming to the stocks, the first stock for Diwali pick is Swiggy. We have a one-year target price of 550, which is almost 25% upside from current levels. We believe that the overall competition in the quick commerce space is easing out, and that should help Swiggy with a slower dark store expansion. The discounting intensity has come down, and there is a lot of focus now on profitable growth going forward. So the entire quick commerce space should do well, where we believe that Swiggy should see a faster profitability in its Instamart, which is its quick commerce business. The food delivery business is something that is set to accelerate. We have seen that they have been so the key differentiating factor for Swiggy has been the innovation that they have been doing on its platform. They were the first to introduce the platform fee. They experimented with the quick food delivery, the Bolt, that is a 10-minute food delivery thing, some of that. And I think with the festive season, the demand improving, that should also help in improving the overall business. If I come to the numbers, the Instamart average order value has seen significant growth. The gap with Blinkit has narrowed. Their expansion in the 1,000+ dark stores, that is now focusing on utilization, improving profitability. So we are expecting the quick commerce segment, the break even, to happen by the third quarter of FY26, and that should be a big factor driving the stock price as well. So overall valuations look comfortable at a discount to the market leader, which is your Eternal with its Zomato and Blinkit business. And with the key matrices, operating matrices gap reducing with the market leader, we believe that the valuation gap should also narrow down. Hence, we believe that this year Swiggy should do much better in terms of the overall business, and hence we recommend a buy on Swiggy with a target price of 550.
Sure, buy on Swiggy with a target price of 550. Would it be your recommendation for just this year, or would you even look at the stock with a longer term 3 to 5 year horizon?
Yes, definitely. We think that the quick commerce business is a structural multi-year story, and with the innovation that they are doing, with the network penetration that they have done, I think there is a lot of scope for further expansion into some of the tier 1 towns, into some of the tier 2, tier 3 towns where they are just penetrating. I think this is a good business model, and a slower growth should only lead to better profitability, better cash flows. And I think valuation catch up would only happen. So I think over the next 2-3 years, we could see a multi-bagger kind of a consistent growth kind of a story from the quick commerce space, where Swiggy could continue to reward shareholders.
All right, the next 2 to 3 years looking strong, set for delectable gains. That's Swiggy for you. But tell you what, Sid, let's make this conversation a bit more interesting. So after every stock, I will pose 3 rapid fire questions to you, and I would expect a 1-line or 2-line answer from you. Let's not make it too big. Snippets of your thoughts on this particular stock. So since you are outlining 3 Pataka stocks for us, or the Dhamakedar stocks for us, the first question in this rapid fire is, if Swiggy were really a firecracker, which one would it be and why?
So I think what comes to my mind is the anar, or the fountain that we light up in Diwali, because it spreads the light across. We see that happening with Swiggy, the numbers to improve, the business growth across segments to happen, and the profitability to grow from here.
All right, spreading light this Diwali, that's Swiggy. The next one, what is that one ingredient that's spicing up Swiggy's growth? Would it be food delivery or would it be the quick commerce end?
So I think it's the quick commerce business. If I were to add, it's the tadka, the mirchi that we add on the tadka. I think that is what is Swiggy doing it with its innovation, and quick commerce will add the spice up to the overall numbers.
All right, tadka, that's how, of course, it's differentiating itself from the competitors. But why Swiggy over Eternal?
So I think Eternal, the market cap, if you look at, is more than 3 lakh crore. Swiggy, as we said, is just at 1 lakh crore market cap and is catching up fast. I think there is a big valuation gap, and the innovation that they are bringing to the table. I think some of these new age digital companies, that is what differentiates them. That they don't fear to innovate, they don't fear to experiment. Some of these things may not work, but nonetheless, that is what differentiates them. So I think all those factors makes us much more positive on Swiggy. But a word of disclaimer: we are also positive on Eternal to that extent. As I said, we are very bullish on this entire quick commerce space. But yes, the preferred pick today would be a Swiggy over Eternal.
All right, Swiggy over Eternal, that's a spicy story and that's what Sid is betting on. That's the first Pataka or Dhamakedar stock from Siddharth. But Siddharth, what is the next one? Which is that other Pataka stock that you're betting on for Samvat 2082?
So the next one is Max Financial, the insurance business, which is now been renamed as Axis Max Life. I think the valuations are pretty comfortable compared to some of the peers at 2.2 times FY27 EV, which is your embedded value, and some of the key drivers that we believe are the above industry growth, favorable product mix, margin expansion, and a structural catalyst where the reverse merger of the insurance company with the parent, which is the Max Life, into Max Financial. I think that will remove a lot of discounting that is happening. If you look at the growth in Q1, the APE growth was about 15%, VNB growth was 32%, while the industry grew at about 5 to 13%. So much higher growth compared to industry. The growth engines in bank assurance, Axis Bank is providing that growth engine from the bank assurance kind of model where the distribution is taking place. In their own, they are setting up a lot of growth in the agency model, so they are not letting that down. Consistently, agent additions are being done, and that is the second growth engine alongside the bank assurance. Margins have seen significant improvement. VNB margins in Q1 were about 20 odd percent, which is an improvement of 260 basis points, which is fastest among its peers. For FY26, the management has given a VNB margins of about 24 to 25%, which is a sharp improvement going forward. This is supported by a change in the product mix to the non-participating as well as the protection plans, new product launches, and rising penetration of some of the riders in insurance issuance. So that should lead to improvement in margins. And the final is the structural catalyst, which I was talking about, the proposed reverse merger of Max Life into Max Financial. This simplifies the corporate structure, would unlock the operating as well as capital synergies, and could drive a valuation re-rating. Hence, we believe that Max Life could do well in the next Samvat. We have a buy rating on Max Life with a target price of 2,000, giving an upside potential of 24% from current levels.
All right, that's the target on at Max Life. A second Dhamakedar stock from Siddharth. But Siddharth, I just want to play devil here. After the recent GST changes, there's been a whole talk of how input tax credit will go, and that would impact insurers. Do you see that playing out in some way? What are your thoughts there?
So yes, Nandita, I think we have had that discussion a lot, both internally as well as with some of these management and corporates. So I think if you look at the math, still works in favor of the consumer or the buyers of insurance. We used to pay 18% GST. Now with the entire GST going away, I think there could be an input credit benefit of about 5 to 6% that they will have to forego. And hence, we believe that still, even if these companies were to increase the prices, the base prices, because of the non-benefit of the input credit, I think we'll still have a 10 to 12% reduction in the overall outgo as a consumer, which should lead to higher growth. I think they will take 1 or 2 more quarters to understand these implications, because these are something which the accounts team will work out, and the newer pricing will come. But nonetheless, a 10 to 12% benefit passing on to the consumer is something that we are envisaging, and that should lead to a higher growth adoption for insurance.
All right. Of course, that would also get ironed out in due course. That's the call. And Axis Max Life, that's the second Pataka pick. But now let's come to our rapid fire on Max Life as well. Which Diwali Pataka would it be?
So fully that I believe everybody, it's safe for everybody. It brighten ups, lighten ups, and makes us smile, and used by everybody. So I think that's the best fataka I can think of for Max Life.
Right, full jhari, of course, any age group, any, it's the most basic and, a necessity, so to say, when you are celebrating Diwali. So I think that's a good choice. But in terms of one big growth driver for Max, the biggest one, which one would it be? What is it?
I think two factors. A, the acquisition or the by Axis Bank, that is driving the growth through the bank assurance channel, which some of the other peers like an HDFC or an SBI were benefiting from, which is now coming to Max Life. I think that's a big growth driver going forward.
All right, got your point. Last one, what's the one song or catchphrase that describes Max Life the best?
So one phrase I think that comes to my mind is "Picture abhi baki hai mere dost." I think there is a lot more to show from the Max Financial that can come going forward.
All right, picture अभी बाकी है और हम भी देखने के लिए उतावले हैं. But the last pick then, this one I think is from the hospitality space, Sid.
Yes. So the last pick is Indian Hotels. I think in the last few years, Indian hospitality as a space has done really well. Demand has far outpaced supply, so there has been a consolidation in the industry. I think post-COVID, one big change we have seen in Indian demography is that people have started traveling a lot more. So if you look at before pre-COVID, Indian Hotels, which is the premium most brand in India, market leader in India, used to heavily rely on foreign tourists, but no longer is the case today. A lot of their business growth is driven by the domestic traveler, the MIC, which is your corporate events, social events, marriages happening. That is driving a lot of growth. We expect double-digit revenue growth for Indian Hotels in FY26. As I said, demand supply dynamics is in favor. There is a lot of cultural, spiritual tourism that is also happening, and to its benefit, I think in hotels, a lot of these hotel companies in India, they have expanded using the asset light model, which is your management contract model, which gives them the flexibility to scale up the business fast. It is and not putting a lot of pressure on the balance sheet. I think that is something that they have done very well. The branding that they have done across different segments, the premium segment, which is Taj, then you have some of the other brands that they have created, that gives out a clear message in terms of what to expect. So in the medium to long term, what we're expecting, a strong room addition pipeline that is driving growth, both in terms of owned rooms of about 3,700, management rooms of about 16,400 rooms that will be added over the next few years. Favorable demand supply dynamics, increasing MIC activities in India, and hence we expect almost an 18-20% revenue and PAT growth over the next few years. So a consistent compounding company that we believe market leader in that sense. and the stock has also kind of consolidated in the recent past. It gives us a good entry opportunity. So hence we recommend a buy on Indian Hotels with a target price of 880, giving an upside potential of 22% from current levels.
So you're comfortable when it comes to the valuations, given the fact that it has seen, some bit of correction in recent times. Is that what you're saying?
Yes. So if you look at, I think the stock
All
price
right.
had gone up
Okay.
sharply, and
So
yeah.
go ahead, Sid. Go ahead.
So I was saying that stock price has kind of consolidated, which kind of gives the comfort in terms of valuation, in terms of EV EBITDA, currently trading at 25 times. I think on its peak, it was trading at about 30, 32 times on an EV EBITDA basis. And with the kind of growth pipeline that we are seeing, the consolidation in the industry, I think the valuation definitely looks pretty attractive at this point, and hence we believe that easily the company could deliver about 20 odd percent growth in terms of financials and about 22% returns for shareholders.
All right. Expect 22% returns of, on from Indian hotels going forward. But if I were to ask you to equate Indian hotels with a Diwali sweet, anything that comes to your mind?
So my favorite Diwali sweet is the Kaju Katli. I think that is something that everybody likes. So this is a place where everybody would like to go spend quality time with their friends, with their family. So I think that's the best that comes to my mind, Kaju Katli for Indian hotels.
All right, load up on the calories, Kaju Katli. Also, one thing, according to you, that works best for Indian hotels and that makes it stand out as well in the sector.
Yeah. Yeah. So I think the management focus, that is something that is differentiating Indian hotels to the industry, is that they're very focused on the customer experience, on the delivery, and last few years, the focus on a profitable asset-light growth. As I said, about 3,700 to about 4,000 rooms would be added on an owned property basis, compared to more than 16,000 rooms that will be added on a management contract basis. So that definitely adds to the overall.
Is that Hamas must disarmed.
So that is the kind of improvement in return ratios that they will bring to the table. So I think that focus on profitable growth is something that we like about Indian hotels.
All right, and any downside risks that you see going forward? Anything that could work against it?
So I think especially if you look at the hospitality space, any disruption, geopolitical issues, any of such kind of activities which can disrupt travel, tourism, that is a big risk to this entire industry.
Okay, any kind of disruption, of course, that would hurt the travel industry. But of course, you've highlighted three Dhamakedar Diwali stocks: Swiggy, Axis Max Life, and Indian Hotels. Game more, as they say. We can't not talk about LG Electronics. That's, I think, if you talk about Diwali patakas, I would call it an atom bomb. The kind of listing it had. Several brokerages have come out with notes on how it's a buy, and they've charted out target price of 1,800 and upwards. At Motilal Oswal, what's the view? Of course, it was attractively priced, valuation-wise. It provided a lot of room. We had a lot of discussions around it before it listed. But post the 50% premium listing, what is your view? Has it changed? And would you suggest a buy on an LG Electronics as well?
So I think, Nandita, we also were among the few who released a report, buy report on the listing day on LG Electronics. We currently have a target price of 1,800. So definitely we see more room for upside. What works in favor of LG is the strong industry tailwinds, home appliances, consumer electronics, consistently growing in India with the GST 2.0 rate cut. I think that is only adding to the overall growth drivers. LG holds category leaderships across segments, be it AC, fridge, washing machine, TV. So the LED TV, they are market leaders in India. The focus of the management of the company has been premiumization over the last few years. So premium products both in the OLED segments, in the smart appliances, that is helping them climb the value chain. There is a lot of focus on localization. So domestic sourcing has increased from about 54% to 63%. That is helping them to expand margins. They are also now looking at exports out of India, so about targeting about 10% exports. I think that will be another growth driver. B2B segment is something that they are now focusing on. Again, 10, 15 odd percent should come from there. That should drive growth going forward. And they are also focusing on the AMC business, the annual maintenance contract. So that should also lift revenue growth going forward. Finally, financials pretty strong in terms of ROE, about 30%, return on invested capital, about 66%, strong cash flows. And finally, the valuations, even at current prices, I think they are about 36, 37 times on a price PE basis on a 1 year forward basis compared to the industry, which is trading at a 45, 50 times. So we see about another 15-20% upside from current odd levels. Any dip in the stock price to about 1500 odd levels, 1400, 1500 odd levels should be taken as a good entry opportunity to LG Electronics from a long-term perspective.
All right, true Pataka in all sense. The kind of listing that it had, dazzled the street and dazzled, investors at large. But before I let you go, Sid, what would be the overarching theme for Samvat 2082? Would it be consumption, or would it be a mix of consumption and manufacturing?
So I think that's a very good question. I think next 1 year, the overarching theme in market should be looked purely from a domestic perspective. So when we say domestic, it definitely covers the consumption theme, but also a lot of manufacturing theme. So I think both should do well. Within consumption, you have the broader consumption theme, the durables, the automobiles, travel, tourism, healthcare. I think that theme should play out. And within manufacturing also, what we are seeing is electronic manufacturing, that is the EMS space, defense, railways. I think those themes should also play out. So post the festive season, the focus will shift to the budget next year. And with the government talking about a lot more reforms now coming in, I think there could be labor reforms up there, which could drive manufacturing as well in the quarters to come by. So I think domestic theme should be something that should be watched out for in Samvat 82.
All right, that's the thought then. That's the overarching theme for Samvat 2082. With that, Siddharth, would like to thank you for taking out time and joining in. Pleasure chatting with you as always. And here's wishing you, your entire team, your family, a very, very happy Diwali, very prosperous and profitable Samvat 2082 as well. Thanks a lot for joining in.
Thank you. Thank you. Wishing you all at Money Control and all the viewers of Money Control happy and profitable Samvat 2082.
Thank you. Thanks a lot. Well, with that, we've come to the end of this special Diwali segment. Would like to thank you for joining in. Of course, stay tuned to Money Control for a lot more content in terms of what you should be doing in Samvat 2082, and of course, lot of big voices as well, and of course, our series as to which stocks you should be keeping on your radar in the new Samvat. But stay tuned to Money Control, and I'll see you soon. Thank you for watching.